If you have ever found yourself in a situation where you opened a short and the price suddenly started aggressively moving upward, pushing your position into deep losses or even worse, liquidating you. Down in this video I will give you two simple recommendations that will divide your short trading experience into before and after. If you take them seriously, I guarantee you will never again put your deposit at risk of liquidation or major losses, and over time you will dramatically improve your short trading results. Let's look at the chart. One of the most common questions you ask sounds like this: how can I know when the market will reverse so that the coin crashes to zero? And do you know what the correct answer is? You can't. There is no guaranteed way to know whether a coin after its first wave up won't make a second or third wave and drag your short into massive losses. And do you know what the biggest mistake in short trading is? It's that people somehow expect to open a position hoping the price will drop to zero and then hold their short for 20%, 30%, 40% gains. This is exactly what leads to catastrophic consequences. How do we fix it? Recommendation number 1. Stop holding shorts to zero. Even the term short position implies short, meaning a quick position. Your trades must play out fast and with small take profits. Instead of holding a single trade for 50-20%, if you open 3-4 quick short trades with good entry points and take profit at 3-4-5% of clean movement, volatility will never drag your trade upward before your TP is hit, because you won't be sitting and waiting forever. While you wait, the coin can reverse and shoot upward. And second, your take profit is far more likely to be hit because any coin with large inflows and heavy volume always has intraday volatility of 3-5-7%. which allows you to catch moves easily with a proper entry. Look at this first pump of 50%. On the 4-hour time frame it looks like simple green candle straight up, but if you zoom in, you will clearly see multiple 5, 7, 8% correction that you can easily capture almost at any point. Now let's return to the recommendation. Why would you open a short and try to guess? Is this the reversal point where the coin crashes to the floor, or will it go higher? The reason you're not securing your trade with short take profits is simple. It's called greed. You want higher percentages, you want 15, 20, 30% of clean movement, but the volatility of altcoins and the market maker who controls the coin, and every coin has a creator, mean the market is fully controlled by the market maker and it moves toward large liquidations. They will never give you 15, 20, 30, 50% moves every time. But because beginners get liquidated on high leverage, even during 5-7% volatility, you have a perfect opportunity to trade and take 5, 6, 8, 4% take profit. If you open 3 trades with a 5% take profit instead of 1 trade with 15% take profit, you will first lock in profits much more frequently, and second, you will never end up in a situation where if you were wrong, the price shoots 50, 70, 300% against you and completely liquidates your deposit. So we fixed the recommendation number 1. Work with short take profits. And if you are wrong, immediately close the position with a minimal loss. In practice, it works like this. If you open a short, set a stop loss of say 3% or 4% and set a similar take profit of 3, 4, 5%. Yes, your risk to reward ratio may not be high. You will have roughly the same percentage of both stop loss and take profit. But if you don't open shorts randomly, not just clicking a button on the exchange, and instead work with metrics, analyze and wait for high quality entry points, then statistically you will open shorts correctly and hit take profit much more often than stop loss. For example, 7, 8 or even 9 times out of 10. Therefore, even if your stop loss and take profit percentages are identically, because you are right in the most cases, over the long run, you end up with a completely profitable mathematical model. Stop losses will protect you from situation where a coin can pump 500% upward. Short take profits will guarantee that you secure the move and don't sit waiting for the coin to crash to zero, because we do not enter short randomly, we wait for imbalances, large volume, entries from short major liquidations. Short liquidations happen, new long positions enter, shorts didn't. High volume means capital was deployed here, and we get a reversal. This repeats again and again. How do you know where the reversal will happen? And what difference does it make where exactly it happens? When you trade with short fast trades, you never depend on the market, and you don't care where it will reverse, because anywhere on the chart you will still take your 4-5% move. That's it. You're fully protected. You will never lose your deposit, never lose your money, and never put yourself into massive losses on shorts that move 100% or more against you if you follow this rule. And over the long run, this will guarantee you profit. If you focus not on trying to open one short and wait for some magical reversal to zero, aiming to take a 50% move, but instead focus on a quality entry, you enter the position properly, take your 5-10% intraday volatility, fix the profit, move to the next trade, continue working. You must work for the number of trades. It's the number of trades that will give you the result you want. Not one trade for 20, but 4 trades for 5%. If you don't have enough time to look for good entry points and analyze the chart, you can subscribe to my private trading club, where certified traders prepare dozens of profitable setups for you every day. Until January 1st, 2026, you have the opportunity to subscribe and receive a lifetime discount on the membership, 50%. The link is in the description. Now let's move to the recommendation number 2. I've said this many times already. Trading can be reduced to just 2 simple rules. We want to open longs in a strong market when the market is rising. We want to open shorts in a weak market when the market is falling. But remember what you usually do. You open shorts into green bullish candles. You open shorts against a strongly bullish trend. You open shorts into a strong market. This is where psychology must be corrected. So recommendation number 2 is this. If some coin is pumping hard, 50, 100, 200%, and you think, okay, now I'll short it after plus 100%, it must reverse. But the coin still looks like this, just straight up. You open the higher time frame and see plus 100, 200, 400% moves. And as we call it, you are trying to short the pump, short the green candle. Why? Where does this urge come from? This need to guess the correct reversal point and short earlier than everyone else. You desperately want to enter quickly because you have a fear. What if it reverses right now and crashes? I'll miss the move. And so you short the green candles. And of course, after that, the coin can easily go another plus 70, 100, 300% up. Rule number 2. Every coin that pumps will eventually dump. There is not a single exception. If I open charts of any coin, all coins that went up eventually fell by minus 90, minus 80, minus 70%. That is a huge amount of potential downside profit you can capture when the coin is falling, and it will fall for a very, very long time. You must understand something very simple. You do not need to be the first person to open a short. In fact, this is the biggest mistake, opening a short earlier than everyone else and getting dragged upward. In short trading, you must be the most patient. You must wait until all early shorts get liquidated, all of them, all those huge liquidation spikes. When everyone who tried to short early loses money, that's when you should enter, when the coin is no longer interesting to anyone, when nobody wants it anymore, when the coin has already broken its uptrend, already shifted into a downtrend, When its highs are decreasing, its lows are decreasing, and when money is leaving it, when the volume is dropping, when it has already liquidated everyone, the market makers, the creators of the coin, have made a ton of money, and then they can calmly send it to its death. Absolutely every coin, as I told you, will fall. And you don't need to worry that when the coin starts falling, you won't be able to make money. Let me give you a simple mathematical riddle. Many people think that in a short you can only make 100%, because if a coin is $100 and from $100 it drops to zero, then you supposedly can only make 99%. That's what people say when they have absolutely no idea what they are talking about. Don't understand trading and don't understand basic math. Here is a riddle for you. How many percent would you make if you were to fix profit? You should never do this in real trading, but this is for a math example. Not by taking the whole 99% at once, but by taking 50% several times and reopening the position. Let me show you mathematically. The coin was $100, it dropped 50% and now it's $50. We fix profit. When from $50 it drops another 50% to $25. We fix profit again. From 25 to 12, from 12 to 6, from 6 to 3, from 3 to $1, from $1 to 0. This is 7 times by 50. 7 times 50, 350% profit, not 100%. And here your short profits for those who say you can make profits in a bullish market because a coin can grow 300%. But fall only 100. They don't understand that on the way down, if you reopen position and take partial profit, you can make the same profit by making many trades. To not overload you with big tables, if you take just 5% profit, then on the move from 100 to 0, you can make about 450% profit. This is just for you to understand. Of course, we will not open 50 short trades in real life. Friends, when a coin is already dumping, you will find your 5% profits literally anywhere. On any piece of the chart, you can easily take your 5-6%. Wherever you open your position, you will be able to take profit because 5% is everywhere. And you know that these are the safest short entries because the coin has already liquidated everyone here. All the money was lost by those early short traders, and your task is simply not to enter early, not to enter short while the coin is still in its mid-grinder phase. If a coin grows 100, 200, 300%, what should you do? Just put that coin in your watch list. Come back in a week or two, because after a pump the coin will fall for a very long time. All altcoins, I remind you, all altcoins fall. Every single one of them. Everything that goes up eventually goes down. Your job is to wait. If a coin grows to 150%, it has about 70% downside potential. In that 70%, if you take 5-7 profits per trade, there are countless profitable short trades. Remember banana, which pumped 1000%. What happened after? Minus 90%. How many safe short positions could you open on that coin? Friends, anywhere you open a short from any bounce, and remembering the rules, set your stop loss, set your take profit. When a coin is dumping, when money is leaving it, we see open interest dropping massively. 50% of positions exiting the market, 60%, 70%. Why? Because the coin liquidated $13 million worth of short traders here. The creators of banana bought themselves new houses, Ferraris, Lamborghinis, because they made huge money off inexperienced traders who can't wait. Right where the coin is already weak and showing breakdown, that's where you are supposed to short, but nobody short there. Instead, everyone shorts where the coin is green and pumping because they want to be the first to catch the exact top. Friends, are you shooting a bow, throwing darts, Why do you need to hit the exact bullseye of the reversal? You should not want this. You should want to make money, not lose it. Now let's conclude this video and summarize what we covered today. First, in shorts, we always work with short take profits. We never wait for a coin to fall to zero. That is mathematically inefficient. It is better to open 10 short trades with 5-10% targets and fix most of them in profit. Second recommendation: do not enter short during uncertainty zones or sideways range. And do not enter early while the coin is still in a strong uptrend. Wait until the coin liquidates everyone, either with a sharp correction or with a long volatile range at the highs. Collects all liquidations, losses strength, and only then calmly begins to fall. This is your moment. This is when we start working in a short. Thank you for watching. Friends, I hope this video was helpful for you.